Markets finished a little mixed again today off the back of more inflation data showing that inflation is continuing to ease. We have what's called disinflation, which is the slowing rate or slowing pace of inflation, not deflation. So we have disinflation. The rate of inflation is slowing. So the work the Fed has done has not yet really worked its way through the economy. It's working on it, but the Dow finished down 200 points, 0.66%. S&P down basically 0.17, basically flat, and NASDAQ again flat, up 0.18. So nothing exciting. Markets were kind of expecting the data that came in. The Dow is down, 4 straight days. We'll take a look at that. Disney shares sinking as they lose subscribers for Disney Plus, down 8% today. PacWest was down quite a bit. I made a little trade on that one today. We'll take a look at that in a second. But investor focus is now on both economic backdrop and liquidity and what's going on versus rates and inflation. The PacWest news kind of falls into the fragile sentiment from either the regional banking crisis and then the debt ceiling overhang. It's a combination of the two. The next big catalyst for the market that could really affect the markets negatively and positively in the near term is the debt ceiling situation. The closer we get to it without resolution, the more pressure that's going to put on the markets. And we saw that play out back in 2008 and 9 timeframe. Wall Street didn't get any surprises from the PPI and jobless claims. Producer prices are expected to continue to decline as supply chain normalizes, while rising jobless claims provide further evidence that the labor market is easing. And in other news, Goldman Sachs annual $6 trillion or estimates an annual $6 trillion in green spending ahead. So we'll see how that all plays out. Morgan Stanley raises its price target for 3 retailers ahead of earnings. And of course, no other major news today. Looking at transportation stocks, talking about Disney. There was something, Bed Bath & Beyond. Obviously, their retail locations are getting ready to go up to auction. The big news is Google's, AI. Google popped on their release of AI news, and it's reshaping Google's products faster than expected, as today should build investor confidence in the business durability. So we'll jump in, take a look at the charts, and we can see Bitcoin here breaking down out of the wedge. We'll take a look at that in a second. The Dow kind of consolidating here, still in this, lower high pattern with higher low pattern in place, which is creating bearish divergence because you have the RSI dropping while price action is rising. So that's creating some bearish divergence, which would lead you to, lead the price of the the Dow Jones average down to this trend line here and see if that breaks down like Bitcoin is doing now to revert back to a, longer trend connecting the low of 2020 to the low of October to see if that holds. A lot of it's going to depend on the debt ceiling debate. NASDAQ still staying above trend right now, has broken out of this to the upside. The S&P within, holding resistance on this line. And same thing across the board. We have bearish divergence in the RSI across the board on these areas. I've marked April, the last couple of years in price action. We didn't get the drop as of yet. The old saying, sell in May, go away. So we'll see if that comes out and holds true again this year. The VIX kind of hanging out, dollar kind of hanging out. Some people calling for this W reversal on the dollar. This is the weekly chart we're looking at here on the dollar. If you take it back to the daily chart, more of a downward consolidation or a downward trend on the dollar. Stanley Druckenmiller betting on a drop in the dollar back to these lower levels we saw earlier in the year or back in 2022. And several people are calling for a W reversal in the dollar. Of course, if markets crack, dollar is going to go up. Treasuries will go up. They were down a little bit today on, the news of slowing inflation. So capital rotating back into the markets. And again, it's all about liquidity. What is liquidity? Liquidity is the money the Fed's pumped into the economy. It's government spending, it's credit expansion, the ability to borrow, which is tightened, but it's still out there, still sloshing around. There's still a lot of capital that has to allocate, that has to go to work. Pension funds, investment funds, life insurance companies, sovereign wealth funds, they have to allocate to grow, make up for losses, and pay down premiums. A couple of things we'll take a look at. So we talked about PacWest today. So I made a little trade on PacWest today. It dropped down quite a bit, gap down. It was down about 30–40% today. Overall, let's jump on the hourly here. When the market opened, it dropped all the way down to $3.99. And I kind of scaled in this $4.40, $4.80 range, somewhere in there. And then I sold it at $5.10. So made a little trade on that, and then I stayed out the rest of the day. Not sure what this is going to do. Bank stocks, especially going into a weekend, are never a good idea. Although it had a loss, nice little pop after, going into last weekend. Pacific West, the reason it was down was because of rumors of withdrawals, but they still have plenty of money to cover their uninsured deposits. They have a pretty low percentage of uninsured deposits at the bank. But anyways, that was a good little trade today. I think I got 8% out of it overall, so not too bad for a quick little trade there. And if you can get 8 to 10% a day on things like that, that's not too bad. But bank stocks are dangerous. I wouldn't advise you to play with those. It is, you never know. The trading was being halted the whole time while it was going on. So if you're not used to that kind of thing, it could wear on your nerves a little bit. But for me, it's just I'm an opportunistic investor, so these types of things don't bother me. And it's a liquid market. The bank is okay, so we'll see if it continues on or what happens. But that was a good one there. PayPal's one I've been watching, caught a little bounce here, had a nice little drop. So I'm waiting to see how PayPal recovers, and if this looks like it could be a potential trade. Schwab hanging out. Zion Bank got a little bounce. Western Alliance got a little bounce. All the banks were down a little bit today. And then we talked about Google getting a little pop here. And, not tremendous, but really off of the AI announcement, about a 10% pop. So not too bad. Google still ranging in the lower area of some of the tech stocks. Microsoft, still on this nice bounce. Still a lower high at this point, but approaching that last April 2022 high. Apple still on its nice trend here, just about back to where it was in August of 2022. Tesla ranging a little bit lower. Meta kind of hanging out. So, the big drivers of the markets right there. So let's get back to Bitcoin here. And the question is Bitcoin going to break out of this triangle? And how much lower can it go? Well, if you take a measured move, because what you have is the this triangle pattern breaking down, and then you also have a head and shoulders that a lot of people have been looking at from the point of the break. So if you take a look at the pattern here, a lot of people are calling shoulder here, head here, shoulder here. The trend line of the neck has now been broken. So the expected move to the downside would put Bitcoin at 23,900, 24,000, somewhere in that range. So that's the next level that we're looking for. Have a lot of support to get through here. Right here in this area, right here in this area. So a lot of support at that 25,000 level. So we'll see if Bitcoin will break through. And that's a target we've been looking at for a while, from a breakdown of this point, to test that 25 level first. If that breaks, then the lower level here would be in that 20,000 level. And I think Bitcoin can potentially drop back down. Basically, might see a big candle and then a little bit of bouncing, consolidating, a little bit of bouncing, and then drop down to that 20,000 level, and then start to consolidate somewhere down in there for a little while, and just kind of work its way out for the rest of this trend that I put together, connecting the bottom of 2020 to the bottom of the November 2022 cycle, to see if price can hold there, continue on, catch support, and then continue on after that into the next halving, like we've seen multiple times in the past. So something kind of like that. I just squiggled this out, but it kind of looks interesting compared to the last couple of times going into the halving, like you can see here back in 2020, and then going back to 2016, same kind of thing. Price was kind of uphill into there, dropped after the halving. Little different time span now. But let's take a look at a clean chart here and take a look at some moving averages, because the other thing that's interesting here that I've been looking at as well is, if you take a look at the daily moving averages, Bitcoin lost the 50, going down to test the 100. So we'll see. Last time the 100, 200 held. We'll see if that will hold. Generally, when it breaks the 50 and the 200, you get a bigger move to the downside. And let's go ahead and take a look at this on the weekly. So big test of the 200 weekly, which has been a major support in the history of Bitcoin. This is the first time Bitcoin has lost the 200 weekly for any length of time in its history besides 2020. But it's never happened before. So this time is different in Bitcoin's history from the moving average standpoint. 200-week moving average was resistance, got above it. So the question is, can this hold? If this 200-week moving average breaks, then that's when we can start looking for those bigger moves to the downside to that 20,000. This is also the midline of the Gaussian channel that's being tested. Generally, when price breaks up and holds a support, Bitcoin can kind of continue on from there. If it loses the midline of the Gaussian channel, it goes down to lower levels. But right here, broke right through it, found support right in this area afterwards back in 2020, kind of like we looked at going into the halving. And then, of course, the pandemic took it out. My thoughts and beliefs have always been the bull market was starting here in 2020 before the pandemic took it out, got back, Fed jumped in, pumped $2 trillion in the economy, off to the races from there. So these are the things I'm looking at for today, and I'll see you in the next video.